At over 1.5 million, we have a bull case. Our starting point is around $650,000, approximately 10 times by the year 2030. On top of that, there are three main components. One is institutional, and I'd classify it as such since it sounds like retail distribution, but really refers to the people who make decisions at B of A, Merrill Lynch, and similar institutions. One like that. The second is that it can be used in place of gold. Given that younger generations are seeking diversification opportunities, it is reasonable to expect that it will absorb half of the gold market. Bitcoin will unavoidably undergo meteoric rise and quick adoption, according to ARK Invest CEO Cathie Wood. Here's why she thinks Bitcoin will buy up half of the gold market's value, a significant chunk in her estimation. Bitcoin is becoming a popular diversifier among younger investors who are looking to avoid the risk associated with more conventional assets like gold. By 2030, according to Cathie's bull case scenario, the price of Bitcoin will have risen above $1.5 million and could even hit $3.8 million. At the same time, Bitwise CIO Matt Haugen predicts in an essay on Bitcoin.com that Bitcoin will reach $100,000 by the end of this year. He still sees this as a great chance for those who can hold on for the long haul, even though the price has dropped recently. The value of Bitcoin might reach $100,000 by the end of 2024, according to a recent note by Haugen, who detailed multiple variables. Some of these causes include the anticipated CCC approval of spot Ethereum ETP, large inflows into exchange-traded products and Bitcoin itself, the impact of Bitcoin's recent price fluctuations, and other similar phenomena. At ARK, we have 4 individuals whose focus is on cryptocurrency in general. This one is all about blockchain analytics and Bitcoin. We estimate that we are halfway through the current bull market based on those, and just because we're halfway through the price increase doesn't mean we're done with it. You know, when a bull market ends, prices tend to go stratospheric. So we don't know where it is, but our on-chain analytics comparing them to the brief 10-year history give us a strong impression. Beyond that background information, that the bull market is halfway through its current phase. To make matters more intriguing, many individuals believe, oh great, the boom since the ETFs were introduced in January. Also, we've done quite well, we're still in it. David vs. Goliath, where we are, makes us very pleased. Yeah, but as of this writing, not a single major financial institution, what we term wirehouses, has added Bitcoin, specifically a Bitcoin exchange-traded fund ETF, to its platform. They're all making an honest effort. One will happen within the next few months, but it might not. That's my prediction. Among the major ones, an independent RIA such as LPL could be involved. They are a bit faster on their feet. The rest will quickly follow suit once you obtain one that supports a spot Bitcoin ETF. At over 1.5 million, we have a bull case. Our starting point is at $650,000, so by 2030, we expect to have grown by a factor of 10. On top of that, there are 3 main components. This group consists of the decision makers of large financial institutions like B of A, Merrill Lynch, etc. It sounds like retail distribution. There you have it. 2, younger generations are seeking diversification opportunities, and since this is a gold substitute, it is reasonable to expect it to absorb half of the gold market. After that, there's the insurance policy. You know, I recently went to El Salvador and met with their top officials. They are leading the way in emerging countries by establishing it as legal tender, as well as making it possible for other nations to do the same with their populations. What a cunning plan. I think it's a fantastic decision. What a cunning plan. I believe that government will be collaborating with my mentor and traveling companion, Art Laffer. The economy is hardly worth $30 billion. Do you think that's true? Holy cow, wow, that's really absurd. Plus, they're actively pursuing it. That's really forward-thinking of them. They have enacted tax policies that will foster innovation. In my opinion, that is a profound concept. Give that some thought. The whole nation of El Salvador, $30 billion. Cathie is so sure of Bitcoin's future success that she suggests her mother invest in an exchange-traded fund ETF backed by Bitcoin. She thinks the current Bitcoin bull market is almost halfway over based on their team's study of on-chain data. But anyway, the end of bull markets typically brings about large price increases, therefore this doesn't guarantee a constant increase. Let us return to Cathie Wood's words now. It is in this path that Argentina is heading. The ministers of economics have been contacted. Unlike President Bukele, they aren't yet prepared to adopt Bitcoin, but they are making strides in that direction. It's on their minds. Additionally, everyone can get the second type of insurance as a safeguard against the inflationary or corruptive seizure of money, or even just as a safeguard for high net worth individuals. I find it fascinating that 50 to 60 million Americans now own Bitcoin, which was obtained clandestinely. This is becoming a topic of discussion during the campaign. It is the central topic of the election for a large number of voters. That is why I succeeded in attracting 76 Democrats to fit 21. The Financial Innovation Technology Act of the 21st century. Big deal, in my opinion, when the Republicans made it an election year issue by promising to defend the right to self-custody or by collecting Bitcoin as campaign donations. That's a huge deal for Bitcoin. We believe that both the ETF and the ecosystem education program provide early adopters and others a chance at genuine self-custody. Despite the fact that our ETF could serve as a vector for centralization, the aim of a spot Bitcoin ETF is to just get people to grasp what this is and how powerful this movement is. If you're already a proud owner of a spot Bitcoin ETF, you're probably eager to find out more. Both the risk profile and the return profile should be familiar to you. Yeah, we usually don't do it all in 1 year, but if the market is already in a bullish phase, I predict that platforms adding the spot Bitcoin ETF will be the next catalyst. And I really believe that will transpire this year. Platforms that were interested in working with us informed us that they would require 6 to 9 months to assess our proposal. We are already halfway through the 6-month period. Therefore, I anticipate that in the autumn, at least one platform will provide the A-spot Bitcoin ETF, if not more than that, then a few of them. And I believe that will be the subsequent wish after that. Actually, I find it quite intriguing. In the perhaps last half I recall, we went through the halves process and many people were hoping for a pop, but it never came. The fact that so many people have bought into it in anticipation means, first of all, that it never happened. Well, I've seen it gestate for a while and then suddenly. Accordingly, the latter two may occur simultaneously in Q4 of this year. Who knows? It might be thrilling. Well, maybe not. Those platforms are risk adverse, so they don't want to, and I think Mike Saylor would be a great ambassador for the space if they just spent an hour with him. However, that wouldn't be safe evangelism. It would have to like Art Laffer, who is incredibly enthusiastic about Bitcoin because, in his view, the Federal Reserve has effectively managed monetary policy throughout the years. I would like to. I think that our research and the fact that we have published multiple white papers suggests that we have taken a methodical approach to studying the topic. As a result, horrible things have not transpired to avoid occurring. Before the Federal Reserve was established in 2000, in 1913, price stability, the gold standard, and intense economic volatility, rapid booms and busts were the norm. They lasted only a few weeks. We built up to a crash for years, and the 2008 to 2009 model is a prime example of that. No interest rates whatsoever, here we are again. Additionally, I am curious about the consequences of private equity, private credit, and the massive amounts of money invested in real estate through leverage. The effects are becoming apparent, particularly in the workplace. Finally, after COVID, there was a mass departure from the workplace. Multifamily presently, even in places where migration has been heavy. As a result, multifamily dwellings are becoming overly common in the Sun Belt. Crisis after crisis, I fear, will persist. Hopefully it won't be 08 or 09. I really doubt it. Still, aiming for yield, which results in undesirable conduct, is the result of maintaining 0% for an extremely long time.